And joining us now to discuss the North American Bitcoin mining market is Fred Thiel, CEO of Marathon Digital Holdings. Hi there, Fred. Great to see you. So since the crackdown in China on mining, on trading, North America has been seizing the opportunity. What are some of the best places, in your opinion, in North America for mining? Is it Texas?
Well, Texas is certainly a great location because of how the grid works there. The ERCOT grid has a large percentage of renewable energy sources, which is awesome. And the regulatory environment is very friendly towards Bitcoin. The governor of Texas, as a matter of fact, is at a conference this week in Texas and is very open to Bitcoin mining. And so we're very positive about that. We'll be deploying a large number of miners ourselves there, actually, over the balance of end of this year and into early next year.
Right. So I suppose as a miner, where in North America are you finding the most friendly regulations, energy, and such to do mining?
There are a variety of states that are attractive. Certainly, Texas is great. Nebraska is great. South Dakota, Montana, where we have miners today, is excellent as well. North Carolina is great. It really comes down to the relationship a miner can have with the power utility and then the local communities. A lot of the renewable energy providers love having Bitcoin miners behind the meter. So essentially taking offload, baseload energy directly from the renewable source and then supplementing with grid energy. So a miner has to partner with both the power generator and the utilities and the grid operators to be able to operate 24/7. But I think there are plenty of great locations in North America.
We've also seen that crypto miners such as Marathon Digital have been rallying amid Bitcoin's recent surge. And I wonder, are your companies correlated to the price of Bitcoin?
Well, I think Marathon specifically is very correlated. We hold over 7,000 Bitcoin on our balance sheet. We're of publicly traded companies in North America amongst the top 10 holders of Bitcoin. So definitely there's a book value tied to the value of Bitcoin as it's held on our balance sheet. We don't sell the Bitcoin we produce. And if you look at our historical kind of production announcements, we produce many hundreds of Bitcoin every month that just continue to add to our balance sheet. So as a Bitcoin holder, long-term, Marathon obviously becomes very correlated to Bitcoin. But it's kind of like looking at the printing presses industry. You can either hold cash or own the presses that print the money. And in the case of mining, the margins are very significant. And so in addition to just the increase in the value of Bitcoin, you get the increase in the gross margins that we generate as an investor. And so that's what makes public miners very attractive.
So you're not only holding Bitcoin, but are you also buying as well?
Well, earlier this year, in late January, early February, we had a significant amount of cash on our balance sheet. We were in the early processes of deploying the miners that we're currently deploying. And we felt it was a good use of our balance sheet to invest $150 million in Bitcoin, which we did at an average price of around $30,000 per Bitcoin, which based on today's price in Bitcoin, obviously has generated a great return for our shareholders.
Right. So Bitcoin's hash rate has also been increasing, as has the mining difficulty. Will Bitcoin's price gains translate into further profit growth as well?
That's hard to predict. Bitcoin's price and the global hash rate are somewhat correlated, but a little bit disconnected. So if you think about 4-year cycles we typically go through, the first part of the cycle is typically very profitable, and cycle typically starts right after a halving. So after the halving last year, we've gone through this period where Bitcoin mining has been very profitable. That attracts more people to want to come into the business. More miners come online. It gets hard to get access to hardware. It gets hard to get access to hosting. So those costs go up. People come into the market regardless. And what ends up happening is as you're 2 or 3 years into the cycle, all of a sudden, the competition because of the global hash rate has become quite intense. Profitability starts coming down, and only the large industrial scale miners like Marathon and our colleagues who are of this scale are able to really survive long term because we have very controlled costs. We control our capital very efficiently, and also we just are very wary about when we deploy so that we're constantly deploying at the optimum time in the cycle.
Amid the crackdown in China and mining, do you see any opportunities there, either to partner with Chinese miners or to, I don't know, buy their equipment or anything? What do you see the fallout of that?
Well, I think, yeah, the big opportunity is for anybody who has hosting capacity. There are many former Chinese miners um, who are very interested in having their machines hosted in North America and mining in North America. And, we're certainly on the phone on a very regular basis with parties who would love to be able to partner with us in hosting. We don't do that today. We mine for our own benefits only. But there are plenty of opportunities. I think, you mentioned earlier, Core was building a big facility. Core is very much in the business of providing capacity to third-party miners. And so I'm sure they're talking to lots of Chinese miners who are trying to relocate their machines. I don't think there's a very big opportunity in buying machines that were in China. Many of the machines in China were former generation S9s, S17s, older machines. Getting them out of China is a bit of a science. Not many people have tried before to move used machines out of China. New machines is a different story. But I think most miners prefer to invest in the state-of-the-art, the S19 scale, kind of 100 terahash machines, and so would prefer not to buy used machines.
Switching topics, so Bloomberg came out with a report, a little investigative piece on Tether, and I wanted to get your thoughts on Tether. Are you concerned about the stability of the crypto markets and Tether potentially not being backed by reserves that are one-to-one for Tethers?
Well, I think this is a question better directed towards the Treasury Department, the SEC, and our regulators. But I personally think that stable coins should be regulated the same way any financial instrument of their ilk should be. And if it's meant to be a stable coin, yes, it should be backed one-to-one by dollars or U.S. Treasuries, somewhat like Circle has done with USDC. I think that's a very important point for consumers and for investors and for the industry.
And does Marathon deal with Tethers or USDC or Paxos?
No, we are a Bitcoin miner and we don't sell our Bitcoin. So we operate in our own little world, if you would, in that, we work with banks and financial institutions where we do generate some yield on our Bitcoin, but we do that with minimal counterparty risk. And then we're also able to collateralize our Bitcoin to borrow against it, as we just announced earlier this week. So we tend to stick to our own knitting.
Just one last question that comes to mind. With El Salvador continuing to build its Bitcoin adoption rate and introducing volcano mining, is there any plans to, or any talks that you're having with El Salvador or any Central American governments?
Nothing that we're going to disclose publicly, but we talk with parties all over the world who have access to all sorts of very interesting renewable energy forms. And it wouldn't surprise me if over the next 2 years you find Marathon has begun to spread its wings outside of North America.
All right. Fred, thanks for joining us on the show. Appreciate your insights.